Oversupply concerns continue to mount for crude oil, but Dan Dicker, you are seeing some buying opportunities, generational buying opportunities into 2016. It's a pretty bold call.
Yeah, I think that everybody is seeing it wrong. I mean, there's a lot of talk about continuing oversupply, and it's true, but you want to be ahead of the curve, and the numbers continue to mount for a huge supply problem to come in 2016. And these are the moments. Look, we had a buildup of supply for about 8 months to a year before crude prices began to react to it, coming down from $100 to below 80 last year in August and September. We have the same thing going on right now. You have a huge glut that's in the pipeline right now, but the supply numbers that are beginning to show up for next year, you've seen a drop of production here in the United States already of 300,000 barrels. We're expecting another 500,000 barrels to come offline in 2016. The Iraqis are saying that they don't have capex to make production. Stripper wells, which is in nobody's numbers, but they are these very, very small wells that have been running since the 50s. They're non-economic. They're shutting down literally by the hundreds, okay? There's a lot of these tiny indications that supply is really going to start to roll off, and it's going to start to roll off over the course of the next quarter and a half. Now is the time when you start positioning yourself in oil stocks for a boom in oil because of a supply issue that's coming down the pike. The leases in the Gulf of Mexico are at 30-year lows. They're dropping production in Saskatchewan. I mean, I could go on and on. Brazil, Mexico. It's all there.
But this is good for the E&P names. EOG, which is one that you're involved with right now. I mean, it's at levels that you haven't seen since 2013.
Exactly. And you need to look at some of these that are going to survive this, because there's redeterminations going on in the coming month. That means the banks are going to start to cut the credit lines on a lot of these guys. So the ones that are walking dead, you don't want. But the ones who are surviving this and are going to come out the other end of this bust cycle whole are the ones you need to position on. And you mentioned one of them, EOG.
XCC is another one.
Cimarex, by all means, is one. They're huge in the Permian. I think they're the best of the plays in the Permian right now.
And it hasn't had that much of a drastic swing over 2015 relative to an EOG, to a Hess. I mean, Hess is at levels it hasn't traded since 2012.
In a lot of ways, Cimarex has been overappreciated here. I thought it would drop under 100. It didn't. But even here, I think it's selling somewhere around 106, 107. Tremendous value compared to what it's going to do in 2016 and 2017.
And Hess as well.
Hess, the same thing. I think just tremendous assets in the Bakken that have the kind of depth that an EOG has, that Cimarex has. But here in the Bakken, it has the kind of depth to outlast, for example, these kinds of financial issues that have been going on for this last year for many of the E&P players. Hess will be able to come out the other side really strong, really whole. I think they're the best of the Bakken players out there that's left.
All right, thanks very much, Dan. For TheStreet in New York, I'm Jill Malandrino.